All right, everybody. So I'm going to explain an important concept called volume preceding price, but show it for predicting. And let me explain. So typically, most people, they're going to buy over here on the breakout. Now, there's a way to, instead of buying the breakout, buy the pullback, anticipating the breakout. So what I'm going to explain applies for this strategy, meaning buying the pullback. All right. Now, when most folks buy the pullback, what they're going to be doing is looking for a couple of things. One is some type of pattern. So, you'll hear all weird patterns: head and shoulder, inverse head and shoulder, cup and handle, and many different patterns. Reversal, like multi-bar reversal patterns, ABCs, and all of that. The other thing that's very common is diversions. So usually some type of momentum diversion over here, looking for momentum diversion over here to then take it. And then you might have some other things, like getting oversold and stuff like that, just some weird stuff. So there's a lot of things. Now, what I'm going to be explaining is none of what you most are aware of. All right. So what I'm going to be explaining is based off of Wyckoff. All right. So Wyckoff has a law called cause and effect, and the idea here is that the cause has an equal effect, meaning more cause, more effect. But there's another aspect to cause and effect that's not explained, or that's not emphasized on, and that is accumulation is the cause and markup is the effect. Accumulation is the cause and markup is the effect. And similarly, distribution is the cause and markdown is the effect. Distribution is the cause, markdown is the effect. This was taken further by a very well-known analyst in the past named Joe Granville, and he came up with volume precedes price. Volume precedes price. But if you see, volume preceding price is just another way of saying accumulation precedes markup, or distribution precedes markdown. It's just another way of saying that. It's like saying accumulation volume precedes or causes price to move up. So it's just a corollary of accumulation causes markup. Volume precedes price means volume accumulation precedes price movement higher, or volume distribution precedes price movement lower. It's the same thing as saying accumulation precedes markup or distribution precedes markdown, but it's just another way of saying it. Now, the thing that he really discovered, though, not discovered, was what he did was he put this into a very practical way of implementation. And what I mean by that, if I tell you, cause and effect is just up in the air, it's just very hypothetical, unless you know that, hey, if I count the cause of this support level I can predict the price up, so I actually do it and count the cause at support levels and predict the potential for price movement. Now, how Granville did volume precedes price is he had this indicator called the OBV, and that really just summed up the volume of the up bars minus volume of the down bars, and gave you a cumulative volume, very similar to, like, it's like the advanced decline line, but for volume. So the idea here is that volume precedes price. So now how do you put this into effect? How do you put this into a practical way of doing it, right? And remember, what are we trying to do? We're trying to do this. We are trying to, on the pullback, determine if there is accumulation. Pullback accumulation. We are trying to, after a rally, price goes down or whatever level, what we want to see is there pullback accumulation, say on a break and test, or a 50% retracement, or a pullback to the moving average, or an order block, or a spring, whatever. The point is it pulls back, maybe a bear flag, a bull flag, or a bear flag, or a wedge, whatever, triangle. So when it pulls back, is there accumulation? If the answer is yes, there is accumulation on the pullback, it means that there is a high likelihood of continuation to a higher high, meaning the markup of price increase, price going higher. So we are trying to determine whether there's accumulation on the pullback in order to get a forecast for price to see if it's going to make a higher high or not. So accumulation is a predictor of higher prices to come. Higher high. Accumulation is a predictor of a higher high. So we want to see rally, pullback, accumulation. All right, want to get in. Why? Higher prices, right? Why is this important? So you don't get caught buying at expensive prices or get shaken out, or get fake out. You want to buy pullbacks, discounted prices, and exit here. Whereas other traders will be looking to buy the breakout, you want to buy the pullback. The only reason you're going to buy a pullback, or the only reason would be if you expect price to increase. So how do you determine whether price is going to increase? Have to have evidence of accumulation. How do you determine accumulation? And that's what I'm going to show. So before I do that, volume precedes price, accumulation precedes markup of price or higher high. And Granville, this is what he discovered. So in doing this, there were various charts. You have your whatever is called a bar chart, a Renko, and point and figure. So this approach can be applied on any chart because it's just summing up the volume. So what I noticed was that Renko with volume is one of an ideal chart to see accumulation preceding price or volume preceding price. It's an ideal chart to see this behavior. Meaning in Renko, when you have a rally and a pullback, over here on the brick, you can see the accumulation of volume. All right? What the hell? So what our model is going to be, and I will show this. So over here, there should be a brick. We'll give it a wick, you know, because some Renko have wicks, mine do. And what we're looking for is a big volume on that pullback. So this is going to have big volume. And what that big volume is going to do is it's going to lead OBV to have a breakout. That breakout is evidence of higher prices to come. Meaning volume breakout precedes price breakout. Okay, so even though in price we're in a pullback, because of the heavy volume here, as indicated by this histogram, this volume here, on balance volume is going to break out. It's going to make a higher high. Because it makes a higher high, it is an indication that price should follow. Okay? So now this is valuable. Very, very, very valuable information. Because it gives you a way of identifying accumulation and a way of forecasting a higher high in price that is based on an actual data point, that is based on buying activity, based on demand. So now let's just take some examples. So, all right. So we're looking at this this thing right here. All right. Now I don't know if it's going to happen right now, but we have a rally. We have a pullback. This second pullback seems to be making a slightly minor high. But if it takes out like the high on here, it would forecast higher prices to come. And I'll give an example of something that's already happened, because this is about to happen. This is current, right? So you see it's breaking this high, the volume for this high. So it's internal break, forecasting price to go above this high. When it takes out this high in unbalanced volume, it means that price should also follow as a principle, you know. So let's take a look at an actual example. Here is an example where you had the market rally down, hit the pullback right here. We can see heavy volume came in. Heavy volume. And even though price is in a pullback, the unbalanced volume has made a low that's lower than the prior lows. Forecasting price will also make a low that is below the prior lows. See that? You have rally, pullback. During the pullback, heavy volume comes in. That volume, on unbalanced volume, makes a lower low. Meaning price is also going to make a lower low because volume made a lower low and price precedes volume. Volume made a lower low, price should make a lower low. Okay? So rally, pullback, heavy volume, which is distribution, gives you a forecast. How does it give you a forecast? Volume already broke down and made a lower low. All right. So similarly, now does this work all the time? Obviously not. Like over here, you know, it gave you this, and it made a higher high. And what happened was price moved up and made a higher high. Then on this pullback, it did that and only gave one brick, right? So that's you have to make that higher high, and here, and now we have another example. All right, so this pullback has volume, but it doesn't make a higher high. This second pullback here, look at this. See this volume coming in? It's already taken out this high. So if I get more volume that's higher than this, it would mean that this is going to break out and it's going to take out the high. Why? Because this is accumulation. And accumulation is the cause, which leads to the effect. The effect is price movement. Accumulation is the cause. And now we can measure it and use a tool to put it into practice. All right, it's extremely valuable information, folks. If you can put it into practice, you'll have a way of forecasting a higher high and forecasting a lower low. If you don't have Renko chart, doesn't matter. Go use a bar chart. You'll see it on a bar chart as well. All right, you'll see high volume. It should show on the bar chart. Granville, when he discussed it, even claimed or even explained that it works on a point and figure, which is amazing because point and figure is really the accumulation distribution chart itself. All right, I find the Renko with volume to rival point and figure in terms of certain things, like, you know, support, resistance, and stuff like that. But the edge that point and figure has is that it can project, the price. All right. Anyway, coming back to this, look at this volume. We're at these lows, right? Look at this. We're at this low. You have a rally. You have a pullback. Where are most people going to buy? They're going to buy the high over here. The edge we would have as Wyckoff traders who understand volume and understand that it's not only for confirming, but it's for predicting. The edge you would have is that it is right here. This thing we can buy here instead of buying the breakout. You buy the pullback. You already hit the pullback once, right? Volume is building. It's about to confirm. It's just a little bit more. Takes out this high with a little bit more volume. You're gonna get a data point telling you that price should also take out this high. So very valuable information. All right, that's all I got. Take care. You can learn this. You can look up Granville's work, but a lot of stuff online. A lot of the stuff online or in YouTube videos, they just don't understand what they're saying. So I know the indicator's been around a long time, but it's not understood. So if you want to learn more about this, you have to understand Granville's what Granville is trying to explain. And he has a book. He has 3 books. Any one of them will talk about volume preceding price. Focus in on that concept directly from the source, meaning directly from Granville. And it's exactly what I'm explaining here. And then figure out how to implement it. What I'm explaining here is how to implement it using Renko, but it should be doable with bar charts and point and figure, whatever you use. All right, you can see, look, this volume in this area is 1.9 times average. So it's going to take out the volume, this high right here. Hopefully, if this bar closes green and builds a little bit more volume, it's going to break out above this high, meaning this OBV is going to break out above this high, even though prices here, it hasn't broken out yet. So this would become a forecast for price during the pullback, saying that the pullback will lead to a higher high because volume made a higher high. Very, very interesting. All right, take care, guys. Bye.